So what we will do is we will start with the last point, which is again the risk. So Mr. Datla, what I'm keen to understand as an SME is, you in a much more volatile world, in a globally volatile world, and for you quite importantly, even the local world is very volatile. You got regulations as volatile. You got interest rates which are going up and down. But as an SME, large companies can do many things to manage that kind of risk. But as an SME, with the options being limited on what you can do to manage risk, I'm keen to understand what have you specifically done in Elico to be able to kind of deal with this much more volatile world.
I think to begin with, I think Elico was the first electronic industry in Andhra Pradesh and the first instrumentation company in India. So we are basically an electronic industry manufacturing analytical instruments, means instruments used for chemical analysis, whether it's your drinking water, whether it's your blood, urine analysis, soil analysis. So wherever chemistry is involved, instrumentation is required. So historically, the company evolved over a period of time developing indigenous technologies. So the last 50 years or so, we did not have any joint ventures or technical tie-ups with anybody. All the technologies were homegrown. So this business was completely focused towards government purchases till the opening up of the economy. So if I rewind back before 95, 93, 94, 90% was government, 10% was industry. But what happened is after the and other issue with this industry is highly technology driven industry, and worldwide this business is dominated by American companies. Even today also the cutting edge technologies come from US. And 70% of the world market is dominated by American companies, and 10% from Japanese companies, and most of the European companies are again owned by American companies, and rest of the world is about 10 or 15%. Even today also the same profile exists as far as our industry is concerned. Way back, if I go back to early 90s and 80s, because of the high duty structure, we had an opportunity there. But in 97, we were the first industry to become part of the W2 agreements. As part of the IT agreement, our industry was classified as an IT industry, and we fell under that first IT agreement which Government of India signed, and Government of India agreed that by 2005 they will bring down the tariffs to zero. So we know that 2005 we are like everybody else. So the biggest challenge for us was when I compare at that time where do I stand vis-a-vis my technology, at least I was a decade back compared to my American counterparts. So how do I address this issue? Where do I stand? So like any SME which was more focused on the Indian context, we were outdated at that institute, and this zero duty regime coming in and opening up of the economy, we thought posed a larger challenge for us. The larger challenge was in the question of our existence itself. Because what happened is a typical government purchase was budgetary based. So just for the sake of spending money, they used to buy and keep the equipment, and very few of them used it immediately. So we never had that pressure to satisfy the customer. But post liberalization, things changed. The industry became very active because the environment became competitive, and they also started buying equipment, but their requirements were different. They wanted the best in the market and the best specification wise, technology wise. So as an old company, we are stuck up with the technologies which are behind compared by 10 years, and we have a workforce with the old mindset. So for us, we have the deadline of 2005. So how do we re-engineer ourselves? That was the biggest challenge we had, whether you call it a risk or challenge. How do we transform ourselves? And we had a union also. How do I change the union mindset? And loyal employees who have been with us for last 20-30 years or so. So to address this challenge, first of all, we thought that we had a biased mindset because because of our past. So we were all driven by what we had done in the past. So how do I get rid of this? So the challenge was to get into an unrelated business. What we thought is instead of diversifying in the same business and again carrying the old baggage, why don't we diversify into a completely different business in the context of changing the mindset of the organization, not in the context of growing the business. So that is one major step we had taken, unrelated in the context of none of us knew what this business was. So that time we thought that we wanted to enter this IT enabled services in the healthcare sector, which did transcription services for US hospitals. Okay. We had an opportunity and we thought let's enter into it, which because it was raw, none of us knew that business, and we took the risk of entering it in, and we were the first to take a decision that we'll start the business in a manufacturing facility, in our own manufacturing facility. Maybe we were the first in India to start a IT enabled services in a manufacturing setup. So everybody warned us actually. They said you're doing the biggest mistake. You'll be recruiting fresh graduates, BA, BCom, BSc graduates and paying them 4,000, 5,000 rupees salaries. And you have workmen working with you for almost 10 years, 20 years, 25 years. Power cut. Can continue? 20 years, 25 years, they are drawing 7,000, 8,000 rupees and you will have a huge conflict that you have a unionized workforce. I said that is a risk I am willing to take. And one side we have a young workforce which is 22, 23-year-old, and other side you have workforce average age of 40 years. And actually, even though we took that risk helped us a lot. The risk helped us in two aspects. One is changing the complete mindset of the organization, and at the same time giving us a different direction. So the risk we have taken, those days none of the banks were willing to fund a medical transcription company because it was high risk business. But fortunately, because of our track record, our bank decided to fund us and we went ahead. And we had to suffer for almost 4 years. Even though we calculated with break even and all that for 2 years, it took us 4 years to. But in this 4 years process, I saw a transformation within the organization. Because you have a young bunch, youngsters coming into the organization where they mingle with the rest of the organization. The organization could see that change. Something new is happening in this old organization. So that brought in a mindset change. And it took us 4 years to break even that business. And at that same time, we reached the 2005 deadline for the W2 agreement, where our equipment will become a zero duty product. Yeah. So what we thought at that time is, for Elico to survive in a long run, I have to become technologically strong. So what we did is, whatever competency we had in the technology, we thought, why not offer these services to other companies outside India. So our focus was more on the expansion of these multinational companies in dominating in US. They were addressing only markets in the developed countries, and they were developing products, high-end products, high-value products, and suitable for those markets. But once India and China opened up, they didn't have any offerings in the price segment. Then we thought, why not take this opportunity and try to sell ourselves means sell our capabilities to our large competitors. So then we started participating in exhibitions in US and Europe, showcase our capabilities, and slowly we were able to attract a few of them, and we started working with them.
So you were able to offer engineering services kind of capabilities to your largest global competitors.
And our model was a little bit more unique because we thought that the type of engineering services we should offer should involve our IP. So wherever our IP is involved, we are interested in getting into a relationship. If our IP is not involved, we were not interested to get into a relationship. So this helped us to, it took us a few years to sell ourselves, and they slowly started with one relationship. Today we have 6 relationships.
But when it came to the 2008-2009 bad period,
Yeah.
so you had the instrument business,
Mm-hmm.
you had the ITES of the medical transcription
Yeah,
business,
yeah.
and you had this third line of business in a way, which is kind of the technology or the engineering
Services,
to
yeah.
your large competitors.
Yeah.
That's how I would, would
Yeah.
that be a fair description of
Definitely.
the portfolio
Yeah.
that you had when you
Yeah.
bought?
Yeah, when 2008 we have come, but there are some issues there also. Like in 2006-7, we entered into a relationship with a large competitor to develop a product for him to address the Indian and Southeast Asian markets. And the relationship continued for 3 years, but unfortunately this 2008-9 slowdown came, and there was a huge restructuring within that company, and they decided not to address this segment anymore, and the relationship broke. But this 3 years relationship with them, they taught us a lot of things at free of cost. So with their help, we were able to expose our engineers to their practices, and their engineers coming and working with our engineers. We could reorient the whole organization in the context of developing products for global markets.
But if you were to look at it in the last 3 years in specific, the fact that you had 3 different kinds of portfolio, because one was exposed to the medical system of US, the other was exposed to the Indian business, and the third was exposed to, in a way, the R&D budgets of the large global players. Over the last 3-4 years, has this portfolio been helpful to you as a company to kind of make sure that...
What happened is, over a period of time, as competition increased, which we foresaw also that the competition increased when the countries opened up, we had to migrate from low value add products to higher value add products. So that had been our focus of strengthening our R&D also. These relationships, the key focus of our entering into relationships with competitors was to strengthen our technology in the context of moving into higher value add products. So that has given us a lot of confidence, because for me, when I develop a high-end product, the competencies don't exist in India, because this kind of education is not available in India. I have to take a basic electronic engineer and convert him to an instrumentation engineer. It takes about 5 years time, and the challenge is to retain him and then move forward. So these relationships are helping me to expose to their best practices, and they are able to give me consultancy at free of cost, because I am working them on some kind of relationship.
If the world was not as volatile, would you still be doing this?
Yeah.
Okay. Yeah. And in a volatile world, is it how important is it to actually do this? Because what I'm taking away is, even though if you are an SME, thinking about creating alternative or multiple revenue engines is an important element of your story. The second important element of your story is, as an SME, not look at global competition as necessarily competition, but as a way to learn technology. And if you are an SME in this volatile world, if you have multiple revenue engines, if you have strong technological capability, your ability to kind of value add and be at a better position becomes better, because
that has been that was quite our focus. Like in 98-99, when we set our vision document, we said we want to be leaders in India in instrumentation. So we focused and we worked toward that, and it took us 5 years. Then we set up a new vision document that we should be leaders We should be a globally renowned instrumentation company by 2015, where all the big guys recognize that Elico is a true instrumentation company. So to achieve that, we set up certain objectives. The first objective was to focus on and develop core competency within the instrumentation. So like we picked up an area and we mastered that area. So that has helped us to get into relationships. Then we thought R&D should be a profit center rather than a cost center, where R&D is not only for in-house but R&D is for outside also. So that the second point is we took up that. And the third is having all this will not be enough unless you generate your own IP. So we evolved a IP policy where we started patenting patents, filing for patents and developing design copyrights and all that. And the fourth point was on we will not be able to do this alone. So this required certain level of partnership. So that is where we worked with partnerships, not only outside India but within India also. Like today we entered the defense area, we work with the defense labs on certain explosive detection equipment. So these are the 4 areas which we focused to achieve our objective. So this is slowly translating into the growth of the company and strengthening the company.
But if you were to look at, and again, the last 3-4 years in terms of how have you fared and what have you done differently with your businesses?
Yeah. So here what happened is last 3-4 years coming to the international market, we have been growing. International business is concerned, but when it came to domestic business, we had serious setbacks. Because when you look at the profile of business we do in India, we had about 40% still coming from government. Even though from 90 we came down to 40, but we had serious issues with government business because of the uncompetitive environment which has happened in the last 3 years. So in principle, we had to take a decision that we better lose the business rather than do the business. So we had a setback. So we had to leave about 20 to 25% business in this period of 3 years. And actually, even though we suffered the 3 years, that helped us actually, because the government business introduced a lot of inefficiency in the organization, because the whole cycle of government business takes about 6 to 9 months, because most of them are tender based businesses and most of your senior management is locked up with that. So when we decided in principle that it's not attractive, better to leave the business, we started focusing more on retail and outside business. So this year we see a drastic change in the way the business is moving forward. And that was one risk which we took trying to cut down on government business.
Now, as an SME, one of the things that in this period of volatility would like to understand is the access to capital, because with banks being much more risk averse, being very careful in what they do and what they don't do. How have you as an SME worked through different options of capital raising, be it for long-term expansions, be it for your working capital?
Actually, as far as our capital is concerned, so far like a typical SME, we have gone through the debt route only. It has its own negatives. So today we are in a position to look at alternative means actually. Today, because those days when we started expanding, because banks were freely giving based on our record, so we fell into that trap. So continuously we thought it's the easier method, because the bank is known to us and they have been funding us. So within 1 month we get everything sanctioned and we keep on increasing our debt. But the last 2-3 years of slowdown in the domestic market made us think seriously. Is it the right path we are looking at to grow this company? So because now we are coming out of this patch, we are looking at newer opportunities. If you ask me today, will you go that route? I will not go that route. So now I have to seriously look at what is the alternate means of raising capital, and we are seriously working in that direction now actually.
But as an SME, do you see many options still available for capital raising?
No, capital raising, different options available today. The one area which CI is actually, I have worked actively in CIS to bring out this, the SME exchange. We are hoping that even the SAB has come out with guidelines. Both BSc and NSC have already are ready with that exchange. We hope that this year something will happen. Maybe next year we'll be ready for that.
That will create a channel where the SMEs could go for raising equity. Yeah. Okay. The other part, very interesting to understand, would be related to the people part of it, because in a volatile world, even the large companies face many challenges. There is a challenge of specific expertise on currency management, on contracting, that typically has to be hired. Also, just any of these volatile situations, just the mood of the companies, the mood of the people. How do you kind of not get them to be seeing only the doom side of the story, but also see the positive side of the story? And how do you get the skills that are required to manage this kind of a world?
For our company, the biggest challenge is the competency in the technology area. That has been our biggest challenge rather than the rest of the areas. So if you ask me today, I don't have a clear answer for that, because we are continuously experimenting on how do we different models, and so far we are not found a successful model out of it, because we are in a very unique industry. If I talk about the other business, the ITS business, we have no issue at all. As far as people is concerned, skills are concerned, growth is concerned, there is no issue at all. But as far as the technology side of the business is concerned, we still don't have a clear direction that this is the path, if we take, we'll succeed. So it is a continuous experimentation which we are doing.
On the ITS also, the people who are in that business, that business is linked to the economies of the Western world. And if it's linked to the economies of the Western world, there is always a feeling of, look, the economies of the Western world are not doing well. So will our company continue to grow? Will we continue to do well? Will our margins continue to remain good? There is always a kind of that negative.
Yeah, so what I think, even though the intention of starting that was different completely, to actually change the mindset of the organization, because we were able to grow that business, we continued that business. But one thing specifically we have done there is applied the same logic of this division to that division. So continuously move into higher value add services. Even though we originally started with transcription, we moved into revenue cycle management, and within revenue cycle management, over a period of time, we moved into higher value add services to continuously maintain our net margins. Even though your dollar fluctuations and all that, we are still able to maintain our net margins, because we are continuously moving up the value chain.
Okay, and thereby, in a way, the employees are seeing that, and therefore they are comfortable with the fact that, look, we are not in the commodity rut. We are providing more value-added services, and thereby. But on the technology side, so that was on the ITS. So on the technology side, what I am hearing from you is the challenge of people finding the right business model, finding the right people model, attracting them, keeping them, motivating them. That kind of continues to
because
be.
What happens is we are in an industry, high technology industry, where mostly we take engineering students. The attraction of the engineering students is to move towards software. So even though they work with us for a few years, ultimately they want to migrate into a software job. So that has always been a challenge to us. But the biggest advantage we have today, at least, we are able to retain some core people actually, who have been with us for many years, who have a passion for technology. We are able to retain them. That's how we are able to grow and innovate newer technologies. But the problem is today, for whatever efforts we put in the international market and with our competitors, we have huge opportunities. But unfortunately, I cannot capitalize on them because I don't have the bandwidth.
Yeah. But in a way, when again as a theme, I'm wanting to see if this captures it. And there's some core people who are with you for a long time. If your focus is on kind of creating that, and while you continue to have a challenge of the younger people who come in and go, in a way it actually may be an interesting situation, because in all this volatility, you kind of have the core competence still with a core set of people, and you have a cost base which is still, because on an average it is for a shorter period of life, it is kind of a variable cost base as against becoming a fixed cost base, which actually may be working quite well. Okay, good. Any other thoughts, especially from an SME perspective, in terms of dealing with this volatility, be it the commodity volatility, the currency volatility? Any thoughts on what as an SME?
From my perspective, what I feel is SMEs will continue to face larger challenges because keep the volatility and those aspects to the other side. One thing we have to understand in the Indian context is the market is becoming highly competitive. And you take any product or any segment of the industry, there are a large number of players, and today you name any multinational, they are operating in this country. So the challenge is, where do you fit in this environment? So with all these problems, people problems, finance, capital problem, volatility problems and all this, where do you fit in? How do you evolve your model? So all the SMEs are confronted with this biggest challenge. And today I cannot claim that if I follow this model, it will be a very comfortable model for the next 4 or 5 years. So the evolution is on a continuous basis. So I cannot define a model for the next 5 years. So how do I evolve my model? That is becoming my bigger challenge.
But also somewhere, as I look through what you have said, and for you, kind of the magic formula has been, and as I heard it, on two fronts. One has been a very clear belief that technology and a focus on technology and being world class on technology and a world known on technology is important. Yeah. Doesn't matter whether you are an SME or doesn't matter. I would be known for technology and I would invest in technology. The second thing I also heard clearly throughout the theme was, somewhere there is an underlying theme on constantly looking for value addition opportunities, because getting caught with a commodity kind of a mindset versus constantly looking at what's the next set of value added services or products that I can offer, and not feeling contented with what you were offering. For you, as I look at it, these two kind of themes very much exist throughout your journey.
Like an example was CII people invited me. They have a center of excellence in Bombay. They run this visionary SME program in the Godrej Center. They once asked me to share my thoughts as an entrepreneur. They were a group of entrepreneurs undergoing this training. How I was trying to address similar what you are talking today. Share my experiences there. In the last slide, I put a slide which says how much money the company has made in the last 10 years. I put 0. And how much value I created, 40x. So everybody was stunned. They're telling, you're running a business to make money. How can you say you made 0 money? So my argument was, culturally in our organization, we are trying to drive value, not money. So my context is, 10 years back, if I value my company, what is the value of my company? Today, if I value my company, what is the value of my company? That means I created something other than my top line. So what is more important culturally to me and what I drive down my managers and down the line is, are we able to create that value? I feel as a technology company, if I am not able to create that value, I cannot sustain.
And would you say somewhere in it, and as we look through this whole imbalanced world as a theme, just some of these elements on whether you are an SME or a large player, and especially if you're an SME, and having that focus on the core element of the business, be it technology or be it something else. In your case, it's technology, but for somebody else, it may be absolute cost competitive spirit. And something around this whole value creation and constantly looking for that extra value added service that I can offer is kind of the way to work through a more competitive world, a more volatile world, and obviously a much more global world. Yeah. Good. Thank you very much, Mr. Datla. It was very, very useful talking to you.